starting your journey to financial freedom. Now. You're listening to the New Investor Podcast.
Okay, so let us not get ahead of ourselves. As predicted, the tech sector did not suffer much from this crisis, and it was a great recovery day on Wednesday on the markets, posting the highest results since March. However, performance on the stock market does not always reflect the health of the economy and its fundamentals. And on the ground, we must be careful tying up the two together. The United States Q1 GDP posted its worst performance since 2008. 10 years of growth have just been wiped out. Everyone is talking about a potential treatment or vaccine in the works. That is still very far off mass production without any guarantees. And everyone is also talking about another Great Depression should we sit idle and wait this one out. So if we are to wait for a vaccine before reopening the world economy, it is evident that COVID-19 will be the least of our problems. Now, we are, of course, to reopen gradually with all the necessary precautions and learn to live with the virus until there is a vaccine for all. But the world must reopen for business at the risk of facing total devastation. The markets just recently reacted positively to the news of a potential treatment that can aid the recovery of COVID-19. That's all, just a temporary reaction causing a spike and not a reflection of where we stand in the overall crisis. The potential for further downsides is still very high, and I would foresee July as a key month to increase some of my positions, as another month of uncertainty will have serious effects on the markets and the world economy. And I am even starting to look at the real estate sector, which I will now not underestimate in terms of investment opportunities in such times. Now, just a quick follow through on the thoughts I shared in earlier episodes. Apple just released their quarterly earnings, and I'm glad to see an all-time record for services, a quarterly record for wearables, home and accessories, and fantastic performance of Apple retail and growth of their online store. The long-term perspective for the company is totally aligned with the accelerated shift of consumer behavior I can foresee post-COVID-19. And I am glad Apple represents 59% of my portfolio. Best move I have ever made. The potential for further upside of the tech sector is undeniable in the long term. And I wish I had invested more into another company I love, Microsoft. I always labeled that company as a smooth operator. And if you ask me today, the stock is still undervalued as opposed to what they can accomplish through the next decade. So I am particularly fond of these two companies amongst others I invested in, but these two have unlimited potential in my view. I will stay in my lane now and not speculate on the likelihood of a Great Depression looming in the horizon, even though some solid indicators are currently emerging. I will leave this to the economists, but I know as much that the spillover from the economic crisis in the US due to COVID-19 measures will inevitably affect the world as it does already. The US pumped more than $2 trillion into the economy so far. Decreased consumer demand, rising inflation rates, worsening employment rates are all signs we're currently seeing that will have brutal consequences in the short and medium term and even the long term. In my personal view, the deep end will be met in Q2, and this is when we will need as investors to actually go in. There will be a reset and eventually we will get out of this. The important remains how effective planners we are, how composed we will remain, and ensure we do not miss any opportunities when they arise. In the meantime, be well and stay invested.